this little tiny itty bitty market. You have 8 of the most powerful Western banks in the world stepping on it so that it will not go up. This is one of these deals that will wake up on a Monday morning one day and be, oh my God, what is that right? Could it really be that high? So yes, silver still to me is wealth, but I will tell you in all of my career, I've never seen a better investment than what silver has in every metric: supply, demand, plurality in demand, military, green, digital, electric, electronic, investing. There are very few things that check all the boxes quite the way that silver does. Ask yourself this question. On the LBMA, the London Bullion Metals Exchange, they admit to having right now about 800 million ounces of silver, of which 500 million belong to the ETF. So they say we have 300 million. They also say that's the lowest position they've had since they started keeping records because it's being drained. We see massive deliveries. In fact, just to highlight that one point, since 2020, when stand for deliveries became a common occurrence, and before that, no one stood for delivery. I started doing podcasts in 2020, a lot of it with Liberty and Finance screaming, they're draining the exchanges. I've never seen this before. No one ever stood for delivery. Well, now, since 2020, 2,136 tons of gold have stood for delivery and 24,072 tons of silver have stood for delivery. Well, that's just off the COMEX, and it goes to say these are staggering figures, but do not include exchanges for physical, which is a significant but unknown portion where swap for London forward contracts and then delivery taken, where you can buy a contract in the West and stand for delivery in London. We're also seeing stand for delivery in China because there is a little known contract that was developed in 2015 where there is a Brinks facility in Hong Kong where you can buy contract in the West and deliver it privately to this exchange in Hong Kong where it's then trucked over to the Shanghai Gold Exchange and sold. But that's for another discussion. But let me just simply say this. The LBMA will tell you that they have, in essence, 300 million ounces of silver that are not owned by the ETFs. They will also tell you that they will admit to trading 292 million ounces of that silver per day, every day. Right? But they also will tell you that those numbers of 292 million ounces a day, basically the entire stash is traded every day. How the hell does that work? But then they go on to say, oh, but by the way, we're only posting the final settlement numbers, so the trades themselves are 10 times that number. So they're basically telling you they're trading upwards ends of 2.9 billion ounces of silver per day, every day. That's 3.5 times annual global mine supply, of which 95% of those trades are paper promises. In other words, they overwhelm the system with paper, the commercial banks who have unlimited money, backed by the Western central banks who want to be able to produce and create high-tech weapons. And if you don't have cheap silver, you can't do that. And for the first time, these countries are now coordinated, sophisticated, and motivated and wealthy enough to stand for delivery. They are beating us at our own game, like jiu-jitsu, where you use your opponent's leverage against
momentum.
They are using our leverage against us. How many people know China? A lot of people know they're the largest producer of gold in the world. How many people know they're the second largest producer of silver in the world? Yet,
right behind Mexico.
All around Latin America, buying all the silver concentrate and the silver doré, which is unrefined silver that comes directly from the miners. And instead of waiting till that silver is refined and is then traded on an exchange like the LBMA or the COMEX, they're buying it in unrefined form, paying double what the West will pay all throughout Latin America, shipping it home to China and refining it there. Therefore, it didn't come off of an exchange. It doesn't affect the price. And no one has any idea how much silver they are really accumulating. So when you see India import almost 800 million ounces of silver in the last 3 years, and China now becoming a net importer instead of a net exporter, and buying up all the unrefined silver they can find, draining the exchanges, this is one of these deals that will wake up on a Monday morning one day and be, oh my God, what is that right? Could it really be that high? So yes, silver still to me is wealth, but I will tell you in all of my career, I've never seen a better investment than what silver has in every metric: supply, demand, plurality in demand, military, green, digital, electric, electronic, investing. There are very few things that check all the boxes quite the way that silver does.
Let's dive deeper into what's really happening behind the scenes with silver. You've probably heard all the buzz about silver being undervalued, manipulated, and ready to skyrocket in price. But few people really understand just how complex and intricate this situation is. When we look at the data from the London Bullion Market Association, LBMA, the actions of central banks and countries like China and India, we begin to realize how significant these developments are. Silver is not just another commodity. It's a key player in a global game of economic chess. To start, the LBMA has openly admitted that it holds about 800 million ounces of silver, of which 500 million ounces are tied to ETFs. This leaves only 300 million ounces in available silver, right? Now here's where things get interesting. The LBMA has also stated that they trade 292 million ounces of silver per day. That's almost the entire available supply of 300 million ounces, traded every single day. If that doesn't raise alarm bells, consider this. They admit that they only report the settlement figures, meaning the actual volume of trades is closer to 10 times higher. This suggests they're trading nearly 2.9 billion ounces of silver per day, which is more than 3 times the annual global supply of silver. How is this possible? It's not. The majority of these trades, 95% of them in fact, are paper promises. These are not physical ounces of silver being moved from one vault to another. They're contracts and financial instruments being shuffled between banks and traders. The commercial banks, backed by Western central banks, are effectively using paper silver to control the price, preventing the value of silver from rising as it should. But there's a catch. China and India are no longer playing this game. They're standing for delivery, demanding the actual metal, not just paper promises. And this is where things start to get interesting. Before 2020, standing for delivery was a rarity in the silver market. Most traders were content with paper contracts, and the system worked smoothly. But something changed in 2020. Since then, we've seen a dramatic shift as more and more traders, institutions, and even countries are choosing to stand for delivery. They want the real thing, physical silver, and they're no longer willing to accept paper promises. To give you some context, since 2020, 2,136 tons of gold have been stood for delivery, and over 24,700 tons have been swapped for London forward contracts. This means that instead of trading just paper contracts, people are demanding the actual gold, and we're seeing similar moves in the silver market. Countries like China have developed contracts that allow them to buy silver in the West and have it delivered to Hong Kong, where it is then transported to the Shanghai Gold Exchange. This bypasses traditional exchanges like the LBMA and COMEX, which are heavily controlled by Western financial institutions. By doing this, China is able to accumulate vast amounts of silver without affecting the global price. And because this silver doesn't pass through the usual channels, the West has no idea how much silver China is actually holding. China is also buying unrefined silver directly from miners in Latin America, paying double what the West would pay for the same material. By doing this, they avoid the Western exchanges altogether, refining the silver in China, where it never touches the open market. This allows China to accumulate vast reserves of silver without anyone really knowing just how much they have. The Silver Institute has already warned that the world is facing a 240 to 250 million ounce shortfall between supply and demand this year. This is the 4th consecutive year of a supply shortfall, and there's no end in sight. Demand for silver is growing across multiple sectors, from investment to industrial applications like solar panels, electric vehicles, and military technology. This isn't just a short-term problem, it's a long-term issue. The world is going to need more and more silver in the coming years, but the supply simply won't be there. And as countries like China and India continue to accumulate silver, the available supply for the rest of the world is going to shrink even further. This is a ticking time bomb for the silver market, and when it finally explodes, the price of silver will skyrocket.
The Silver Institute will tell us that there is going to be about a 240 or 50 million ounce shortfall between supply and demand this year. This is the 4th year in a row, I believe. It is now a structural imbalance. Greater demand than there is supply. That's number one. If you went back and dug a hole 5,000 years ago, you would see a 16-to-1 geologic ratio between silver to gold, meaning 16 ounces of silver would come out of that hole for every 1 ounce of gold. And it was that way all through human history for thousands of years. Even when Sir Isaac Newton was trying to figure out how much gold and silver should he use to figure out the relationship in the currency, he chose a 16-to-1 ratio. That is, let's call that God's ratio. That's the geologic ratio. And it had been that way forever. And we get to the Industrial Revolution, largely because of logistics, where you can have $1 million worth of gold in a backpack and run. $1 million worth of silver is going to weigh, 2,000 pounds or whatever. And so gold's role as money, gold's role in logistics, and silver's role as an industrial application for many applications, anything that conducts electricity, basically. That ratio had been skewed to about 42-to-1. Right? That's man's ratio. The price is 42-to-1, but the mining ratio, the geologic ratio, always stood at 16-to-1. So that made silver a good value just because of that imbalance. Well, let's fast forward to where we are right now. And we take the price of gold today of $2,515 and the price of silver, call it $28.50. The ratio, God, is that right? Is 98. That can't be right. Is that right? 2515 divided by 28.5. 88.2. That's more like it. Yeah. At an 88.2-to-1 ratio, you are talking roughly 0.5% of the time over the last 5,000 years we've been in this high ratio, which is manipulated to all hell. In every sense of the word, this is an anomaly, and it becomes more of an anomaly when you realize that guys like Keith Neumeyer, my buddy who was the CEO of First Majestic Silver, one of the biggest mining companies in the world, will tell you and tell me and tell publicly that ratio geologically, God's ratio, is now 7-to-1. It's coming out of the ground at a ratio of 7 ounces of silver to every 1 ounce of gold. And that's because, like your skin is epidermis, silver is found in nature in a form called epithermal, right near the surface. Big deposits were found a long time ago. So he's saying it's coming out of the ground at 7-to-1 because it's depleting in nature. And the price ratio says 88-to-1. It's averaged 16-to-1 for 5,000 years. And the price ratio, divide gold into silver, really since the Industrial Revolution has been about 42 to 45-to-1 on average for almost 200 years. In every respect of the word, we are in rarefied air. And when I look at the things that over 35 years that I've done that have proven to be uber successful, they've always centered around identification and exploitation of price anomalies. Whether it be the Swiss franc and gold, whether it be gold and silver, whether it be numismatics and bullion, whatever it is, when you see an anomaly, it's there for a reason. There are 8 banks right now, 8 Western banks, commercial banks, that hold the largest concentrated short position of any commodity ever traded in the history of the COMEX market, ever, in silver. This little tiny itty-bitty market, you have 8 of the most powerful Western banks in the world stepping on it so that it will not go up.
Before 2020, it was incredibly rare for anyone to stand for delivery on their silver contracts. Most traders were happy with the paper promises, and the system worked just fine. But then something changed. In 2020, we started seeing massive stand for delivery events. And since then, the trend has only accelerated. To give you some numbers, since 2020, 2,136 tons of gold have stood for delivery, and over 24,700 tons have been swapped for London forward contracts. This means that instead of just trading paper promises, traders and institutions are now demanding the real deal. They're buying contracts in the West and having them delivered to places like London or Hong Kong, where the metal is then shipped over to Shanghai for sale. And this isn't just happening with gold, it's happening with silver too. China has even developed a special contract where silver can be bought in the West and delivered privately to a Brinks facility in Hong Kong. From there, the metal is trucked over to the Shanghai Gold Exchange. This means that China is bypassing the traditional exchanges like the LBMA and COMEX, and they're accumulating vast amounts of silver without affecting the global price. And the thing is, no one knows how much silver they're really accumulating. They're buying unrefined silver directly from miners in Latin America, paying double what the West would pay, and refining it themselves. This silver never touches an exchange. And it doesn't affect the price, which means China is quietly hoarding silver, and we're none the wiser. Alright. Now let's look at the big picture. In the last 3 years, India has imported almost 800 million ounces of silver. China, once a net exporter, is now a net importer of silver. Both of these countries are draining the exchanges, and it's only a matter of time before the system cracks. The Silver Institute has already warned that we're going to see a 240 to 250 million ounce shortfall between supply and demand this year. This is the 4th consecutive year of structural imbalance, where demand outstrips supply. And it's not just investment demand that's driving this imbalance. Silver is used in a wide range of industrial applications. Everything from solar panels to electric vehicles to high-tech military weapons. The green energy revolution alone is going to drive up silver demand for years to come. This isn't just a temporary problem. It's a long-term structural issue. We're looking at a future where the world is going to need more and more silver, but the supply simply won't be there. And as more countries like China and India continue to accumulate silver, the available supply for the rest of the world is going to shrink. Historically, silver has been a valuable asset. For thousands of years, the geological ratio between silver and gold was 16 to 1. This means that for every 16 ounces of silver pulled out of the ground, miners would find 1 ounce of gold. This ratio held true for most of human history, and even Sir Isaac Newton used it when establishing the value of gold and silver in British currency. But today, the ratio is completely out of whack. As of now, the ratio stands at about 88 to 1, which is one of the highest in history. In other words, silver is extremely undervalued compared to gold. And when you consider that the geological ratio has actually dropped to about 7 to 1, because silver is becoming harder to find, you start to see just how big this anomaly is. Keith Neumeyer, the CEO of First Majestic Silver, has said publicly that silver is being depleted in nature. The big deposits were found long ago, and it's becoming harder and more expensive to mine. This is why the price ratio between gold and silver is so out of sync. The price ratio might be 88 to 1, but the mining ratio is only 7 to 1. This is a huge price anomaly, and it's one that can't last forever. One of the reasons the silver price is so low is because of manipulation. 8 Western banks hold the largest concentrated short position in any commodity ever traded on the COMEX market. These banks are actively suppressing the price of silver by selling massive amounts of paper contracts, which creates an artificial surplus and keeps the price low. But the problem is that the rest of the world is catching on. They know that the West has been manipulating the price of silver, and they're using this manipulation against us. By standing for delivery and draining the exchanges, countries like China and India are slowly but surely cornering the silver market. One day we're going to wake up and realize that the silver supply is gone. The vaults will be empty, and the price will skyrocket. It's only a matter of time before this happens. And when it does, the Western banks that have been shorting silver are going to be in a world of hurt. In my entire career, I've never seen a better investment opportunity than silver right now. Every single metric points to silver being the best investment out there. Whether it's supply and demand, military applications, green energy, or digital electronics, silver is in high demand and the supply is shrinking. When you combine the structural imbalance between supply and demand with the geological ratio of 7 to 1, the current price of silver is a complete anomaly. We're living in a time where silver is massively undervalued, and the smart money knows it. The Silver Institute has already warned that the supply shortfall is going to continue for the foreseeable future. And as more countries like China and India continue to accumulate silver, the available supply is only going to get smaller. The silver market is ripe for a massive price correction, and when it happens, those who have positioned themselves early will reap the rewards. It's not a question of if the silver price will explode, it's a question of when. The fundamentals are all there: rising demand, shrinking supply, and massive manipulation by Western banks. The silver market is a powder keg waiting to blow. So what should you do? Accumulate silver while you still can. Whether you're looking for a hedge against inflation, a way to preserve your wealth, or simply a solid investment opportunity, Silver checks all the boxes. And remember, this is a once-in-a-lifetime opportunity. The price of silver won't stay this low forever. As Andy Schectman often says, we are witnessing the greatest wealth transfer in history. And silver is going to play a major role in that transfer. So don't wait. Get in now before the rest of the world catches on.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.